Hello, and welcome back to episode 5 of the Dividend Portfolio Updates. So, we have big news today in this update because I made 2 big changes to the portfolio. Right now, we are sitting at $28,000, and the first big change is I have sold Nike in the portfolio. I had, as you can see, about a almost $1,400 position in Nike, and I sold it recently. And the main reason I did this, well, there was a couple reasons. One is simply just because Nike is in the sort of clothing industry, and although Nike has done really well historically, the clothing industry tends to be very trend-based, and I just kind of find that sort of thing to be kind of risky, in that you kind of need to buy a clothing stock at the right time and have it get trendy for you to actually get good returns. A lot of the times you'll have a clothing stock do really well for maybe, let's say, like 2 to 4 years, but then completely just crash because it's no longer trendy to wear those sorts of clothes. And while Nike has been pretty consistent, there are examples of other big clothing companies, like for example VF Corporation, that performed really well for like 35 plus years and then just crashed 85% in less than a year. And honestly, although I think Nike is probably the best clothing stock still, and if I had to pick one to invest in, it would be Nike, that doesn't change the fact that I just don't want to be in any clothing stocks right now. So that is why I ended up getting rid of Nike. I think it's still a great company. I just don't want to take the risk of owning a clothing stock, which is why it is no longer in the portfolio and I have sold it. And as for the money, I have redistributed it across my other stocks. I also just want to keep the portfolio from getting too big, because from the last video you saw that I added a new stock in GE Veranova. I haven't added too much to this position, simply because it's been trading up a ton and I don't really want to add to it currently, just because I feel like a lot of that is just hype for the new company, and I'm just not interested into adding more of it at these prices. But if it goes down, I might add more GE Veranova. And that brings me to the other big move, which was another big sell in the portfolio. And you can see here I have sold SCHD, which is a dividend ETF that basically holds a bunch of dividend companies, and it's typically seen as one of the best for dividend ETFs. It has a really low expense ratio. It's like 0.06%. I'd still recommend people get it if they want to. The main reason I got rid of this one is because SCHD for me was mainly a holding place for cash while I figured out exactly what companies I wanted to have in my portfolio. So I basically bought it at the start of the portfolio, and I put most of my cash in SCHD. As you can see, it had just about $6,000 in it, and I was holding it in the portfolio as kind of like a temporary spot where the cash could like accumulate gains while I kind of researched and figured out exactly what companies I want to have in the portfolio. It wasn't meant to be like a super long-term holding, and I kind of also liked it just because it offered me a lot of diversification in the portfolio, because I don't own too many stocks, and it offered me some risk protection against I don't know, if in case my stocks that I do own all crashed or something like that. But Another reason I wanted to kind of get rid of it now is I didn't really feel like SCHD was going in the direction that I wanted it to. Recently, some of their reorganizations I wasn't a big fan of. Mainly the fact that they sold Broadcom, which was like their biggest holding. And I think Broadcom was like a really good company. And the main reason they sold it is because SCHD is a dividend ETF, and Broadcom's dividend yield percent got to a point where it was pretty low, and they wanted to get rid of it so that they could get other companies that have a higher dividend yield. And I just don't like that sort of style of investing. I don't think you should base which companies you own off of which have the highest dividend yield, because that's not really a metric that means the company's really good. In fact, a lot of times the reason companies get high dividend yield is because they're performing poorly. Like, for example, if you have a company, let's just say Microsoft, they have like a 1% dividend yield. I think it's a little bit lower, but let's just say it's 1%. And they trade at about $400 a share. If Microsoft were to drop 50% overnight, unlikely, but let's just say it happens, they would be down to $200 a share, and their dividend yield would have doubled to 2%. So now Microsoft would be technically a higher dividend yield paying company, and maybe more attractive to something like SCHD or someone who likes to invest based off of dividend yield. But are they a better company? The thing is, if they drop 50% overnight, there was probably a reason. Yes, if it was just like people being really scared for no good reason, then maybe it would be a good investment. But usually if a company drops, there's a reason for it, and their dividend yield goes up. So you kind of have this situation where if you're hunting high dividend yield companies, that means you're looking for companies that have performed poorly and probably aren't doing so well financially. Like, obviously you're going to run into some cases where you get lucky and you find a company that kind of traded down for not really a good reason. Maybe people like misunderstood some event and were like, oh, this might impact the company badly, and it didn't end up happening. But in most cases, when companies trade down, there's some reason for it. And usually it's not a good reason. Usually it's because they miss earnings, or they're just not growing as fast as they used to, or whatever. But the fact that SCHD hunts those sorts of companies that has a high dividend yield and gets rid of companies that they own that no longer have the highest dividend yield kind of doesn't really match my investing style. I don't really care about dividend yield, and I just want to own quality companies. And I thought Broadcom was a really quality company. I don't own it, but I still really like the company, and like it's definitely one that's kind of on my watch list, and I definitely look out for it. But I have a very small amount of companies, so I'm not trying to expand the amount of companies I own too quickly. I want to keep about 10 to 15 positions, preferably closer to 10. So I'm not going to add Broadcom, but I did really like that company, and I didn't like how they sold out of it simply based on dividend yield. And yeah, I just don't like that style of investing. So that is another reason why I moved away from SCHD. And also another thing to note about SCHD is based on performance, SCHD was up 8% since I bought it, which was probably about a year to a year and a half ago when I started the portfolio. And compared to the rest of my portfolio, the rest of my portfolio was up about 20%. So in the same amount of time that I'd owned like SCHD versus the rest of the stocks, it had underperformed my portfolio. So sort of what that helped tell me as well was that I was picking pretty good stocks. Maybe it's a more risky way of doing things because, I don't own as many stocks as there are in SCHD, but I was pretty heavily outperforming, like 20% versus 8%. And then you also got to consider that my portfolio also had SCHD in it. So not only is that 8% just lower than 20%, but without SCHD in the portfolio, those gains probably would have been closer to like 24, 25%. But yeah, it was a big part of the portfolio, so it kind of was dragging it down as well. So I felt like I'm picking stocks pretty well, and I'm outperforming SCHD, and I think that in the future that will continue. But yeah, I redistributed it, so now my holdings in the portfolio are bigger, and I'm more concentrated into the stocks that I've chosen. So yeah, that's sort of been what's going on in the portfolio. We're up to 28,000. I think everything is performing really well. I like where the portfolio is at right now, and hopefully this ends up being the right decision, and hopefully we continue to outperform SCHD going forward. And I'll see what happens next month, I guess. And I'll see you then. All right, bye.